into it. We're going to record this. So, guys, we're going to go over almost like back to basics, but we're going to go. Hopefully, there'll be some light bulb moments about really simplifying the way we're going to look for trades and things like that. So, very quickly, we obviously know what the 4 different types of movements are: your expansion, your retracement, your reversal, your consolidation. But what we need to really get good at is defining the reference points in institutional order flow. So we need to start thinking about order blocks, which is on, yes, everyone should be on mute, I think, at the moment. Order blocks, imbalance, liquidity grabs and pulls, and equilibrium as well. Let me just mute everyone. Is that better? You should still be able to hear me. Cool. So what we know about what price does, we know that price moves in cycles. And this is when we want to be buying when it's low, just here. We want to be selling when it's high. So if I change that color really quickly. So we want to be selling at highs. Now, when you go deeper into it, what you'll find is areas where you can identify the trading range. So if price is expanded to the upside, we then need to look to identify our trading range. Now, we can work with the 50%, we can get the 70, the 88%, things like that. But for now, let's just focus on getting our discount area. And within our discount area is where we are looking for order blocks, imbalance, liquidity grabs, liquidity pulls, and we do that on a smaller time frame. This here is going to save you loads and loads of stop losses, because the amount of times educators out there, people have taught you or taught people to use the last up candle, last down candle before the up move, set the order on a higher time frame, which, don't get me wrong, sometimes comes in really, really well. But how can we stop ourselves from being stopped out? So the simple answer is we wait for evidence. So when we're waiting for evidence, we're on a smaller time frame, waiting for price to give us a reason to push higher, just like that. So we can see here, we're in a retracement phase, and we're reversing to the upside. We're breaking structure, and we need to come back down to this area to mitigate. This is your accumulation from a higher time frame perspective, because we're already bullish and we've accumulated within our point of interest. So let's just say this is your daily time frame. Let's change the color of this one and call this maybe the 1 hour time frame. And you can be, they can change, so it's not to, it's subjective. And then what we're going to then do is look for areas to move inside of our new trading range on a smaller time frame. So we can wait for price on maybe a 5 minute, a 1 minute time frame to then break structure again, giving us reaccumulation to the upside. So this here is your reaccumulation on, let's call it a 5 or 15 minute time frame. So 5, 15 minutes time frame. So it's always best to wait for the reaccumulation within your areas of interest, because that way we are getting extra evidence. And also you can get really, really good risk reward trades compared to if you set your entry down here and you eventually, got up here, you may get a bigger risk reward ratio on a smaller time frame. So also what this helps with is prevents you from being stopped out, because in a situation where price is going to reverse on the higher time frames, all we're going to do is see this. So we're not going to be intending to get in. But what happens when we get in here and we've swept under this low here? what we can then do is anticipate moves to the upside for a long-term sell. So, for example, if I just make that bigger there. On a smaller time frame, when price is bearish and it breaks below the low that exists over here, you can anticipate price needing to, at some point, accumulate to push higher. So we can eventually get ourselves in short-term areas. So if you go back to sort of like maybe the daily, the 1 hour, imagine it being a big candle. So this here is your move. And then we're waiting for price to get there because we're going to change our bias. So this on the daily is our sell area now, but we can buy into the area because we've closed below. So we can still potentially look for buys, just not in our point of interest. And it has to be when we get accumulation to the upside. And the best place to get it is after a consolidation phase. So if we've consolidated for a while and we've closed low and then closed high, then obviously you guys know this pattern. We look like we know we can get in on this area here to the upside. So looking at what the charts present with us here, I mean, this is GU. Let's go on this one because there was a trade here. Right here, we can see the expansion to the upside. This here is a perfect example of the accumulation phase happening right here. This is on a 15-minute time frame, and that is after taking out all of this trend line here, taking out all of this liquidity in here. We can see the trend moving down, moving down, moving down, moving down, price pushing up, coming down. Now, what you then have to do is identify your trading range. We know we're inside our discount level. Within the discount level, what can we find that is of interest to us? Well, we can find this FU candle. An FU candle is a candle which swept liquidity. An institutional candle is the same, but it just didn't sweep the liquidity. So we haven't got any imbalance. So that possibly is a red flag because it's always nice to have imbalance. But what we have got is this big expansion to the upside. So that's really showing us that price is going to push higher. Really convincing move. And then what happened is price slowly made its way into this area here. So that there is a nice entry and it got you out. That's the high. So you're already in profit there. But if we go one level further, we can anticipate what price may be doing next. So we can maybe have a look and see if we can find potential moves to the upside. So now let's just move that to the side. So we know it's there. We can identify structure on this time frame here. Now, this is when you need to start think about price moving in structure here. So if you go onto the line chart, you can see what happened. Price was moving down, price is moving down into where our 1 hour tapped us. So we're in the trade on the 1 hour, the 15-minute, and price breaks structure right here. Now we can have a look at the candles. We can identify the trading range. What's here? This is our zone right here, our discount zone. So we want to get into price here. What can we identify in here? Well, if we refer back, we're looking for order blocks, imbalance, institutional FU candles, liquidity sweeps. Well, we've swept liquidity right here. So that's a no-brainer. We've got this area here. Price taps in perfectly. We've also got imbalance right here. This is just rinse and repeat all day, every single day. And what can we find? Price taps into our entry to the pip. And obviously looking at what your targets are, you could go for, to take this high here. You could aim for this high here. That's a 6-to-1. Now, obviously looking at what price did there, you're realistically probably going to come out of this high here. So that's where it got taken. That high over here was taken. That's an 8-to-1. Compared to your 4 or 5-to-1, you've doubled it on the 1 minute time frame, and you're waiting for the same thing, and you've got evidence that price is moving higher. So it's just a case of waiting for that extra evidence. Now, you would have had a bit of a scare because obviously price came all the way down back into drawdown and pushed higher to the upside. And if you had have held it, which I don't think many of us would, you could have got yourself a 10-to-1. But even just coming to this high here, which is that high right there, we can see that that would have given you an 8-to-1. So you could have come out in profit there. Even if you saw price aggressively moving down, you could have come out at maybe a 6-7-to-1, or you would have had your stop loss at break even, whatever. But this here is pitch perfect what we're looking to do. And you just do this on every single time frame, rinse and repeat. And we can identify that we've had the reaccumulation in our 15-minute area. So you can see now price is moving higher. But how do we get into price if we miss the move? It all depends on our overall targets. So looking at this here, we've identified that, you know, we've made this high, we've come down. This is our first target right here. But price could easily react from this area here and come down. So that's not really a sufficient target. So you could be targeting this imbalance. But at the moment, there isn't really anywhere for it to go. So what you could, when price is lower, so for example, the entries you could have gotten within this area here, if this wasn't here, it's a bit of a shame, because essentially you then look for areas of imbalance to take price all the way up. If you were on the alerts channel earlier, I was looking at the indices in all the different imbalance areas for potential to take price higher and higher and higher. So if we actually go on to the indices, have a little look. So overall, you know, we've obviously taken Monday's high. Looking at what happened from the New York session today, price came into this area here. And this is where you can take short-term scalping opportunities. When, let's say the, you know, for example, the entry is down here, just as an example, it's hypothetical in this situation. Now, this high is the target. What you can end up doing is seeing price expand away from the previous low. So we've got price moving away, we've broken structure, we've come in, we've filled, we've pushed higher. That there is kind of your drawdown area, taking price higher, leaving an area of imbalance right here. So there could have been an entry there, but you can take that because you're here. You're moving in here. But once price takes above it, there's not really a valid entry point anymore. So it's all about targets. Realistically, it's about looking where price should go. So if we move to maybe Dow, and if you've got any questions, guys, please feel free to put them in there. So this was 3 o'clock today, or yesterday. Where are we today? So looking at what price did, Dow, we can see price moved into here, so we can follow price up. Now, why are we in here, buying in here, and not down here? So let's say we missed this move yesterday, because this is a really good buy opportunity right here. New York session yesterday, that there's a really good buy. I don't even need to go onto a lower time frame to see that there is a really, really good opportunity to buy. And I'm sure we would have had price, you know, taken us in. In fact, if we have a little look at what's actually happened in here, we can hopefully get some idea. So price moves in, creates this structure, comes down, fills in this imbalance here within this order block right here. Price moves higher. So you could have got yourself. So there's not really another. Okay, so here it is right here, 5-minute time frame. You can see price has reacted. Price is moving higher. Price has made this low. It's made the short-term high, short-term low, broken structure. So that there is your structure break. Price has come down and taken it in. That there would have been a really nice entry yesterday at around 4:45. Not ideal time, because we don't really want to be trading that much later in the day, but you could have got in on this imbalance. You wouldn't have got the entry unless you tapped in early. But that there is you know, really, really nice entry. But focusing ahead to today, if ever knows, what is the order block? So an order block essentially is an FU candle, an IC candle, and that is an order block. But the reason you can use the word order block is, so for example, this area right here where there's 2 candles, if you wanted to, you could use both candles as your order block, because 1, 2 is responsible for the move down, which swept below this liquidity and then pressed higher. You get better, more refined entries when you're using the last down candle, but a lot of the time, price can just come to the top of the move, which is this area here. So 1 and 2 candles. So like here, 1, 2, they're ordered. That's an order block. that is also an order block as just one single candle, but the move in general. So even if you just want to forget about the word order block and just think of the move down before the move up. That's kind of how I learned it when I was learning all this sort of stuff. So right here, 1, 2, 3 candles, that there is a sufficient order block. And price came into the order block, but it didn't come to the last candle. It missed the last candle just about. So you could have got in on the order block as an example, and that there can be your point of interest. So instead of taking the last candle as your point of interest, take the move as your point of interest, because you can see price came in, and that's where it gave us that 5-minute entry within there, which we run over. So sufficient on any time frame. Yes, any single time frame you want to go on. So even if we go up to the daily time frame, this is your order block right here. So, you know, 1, 2 candles in our point of interest, we could easily sell. Now, luckily, I think we've gone up to the last candle anyway. Do you count the wicks and order blocks? You can, you know, because on a smaller time frame, it depends. If you're on a higher time frame, then you can, because there's that won't be a wick on a smaller time frame, if that makes sense. So we're not going to have a wick on a smaller time frame. On the smaller time frames, I'd rather count the bodies because there's not a lot of volume in there. But that'll be on the 1 hour. That'll be price action moving higher. But if we go down to the 1 hour here, we can see price following up. Now, why are we interested in buying here? Well, the reason, because typically we want to buy when price is low. You want to buy at the bottom of the range, and that was in here. The reaction happened from this imbalance here. You should always be looking to the left. When you look to the left, you can see why price has moved higher. If you saw this expansion, think to yourself, what's happening and why is it happening? So we've made a low. Now price has pushed higher. Look to the left. We can see there's imbalance. That's the reaction point. Get all of these time frames on as well, because then you might even end up seeing another candle somewhere along the line. Doesn't look like we do so far. It looks like it's just imbalance, which again, that's fine. So yeah, even there, imbalance. And we saw price push higher. That's our expansion to the upside. We want price to come back down. 5-minute entry in here. So the reason we're going to get in here today is because we're not done on the range. The range is still moving. Technically, price shouldn't close any lower at the moment because we're attacking this high. So let's attack this high and go by what structure's telling us. Now we've got ourselves this consolidation within this imbalance. That there is your classic manipulation, because that there is enticing people to sell in this market. Okay, it's enticing people to sell, but that's when, as smarter traders, we're going to go on the higher time frames, and we're going to obviously see that price is actually bullish, and we're on a higher time frame looking for price to move higher. So the 1 hour shouldn't really be respected because the 4 hour is bullish. This is counter trend movements coming down and pushing up. All that's doing there is forming liquidity. Price drops down, pushes higher. We've got this point of interest area right here. So this order block we can use. We're looking at price to come down. It came down today during the New York session. And you could have potentially looked for a move in here. So let's see if we found one. Price pushes in. So this is when price is coming into the area. Obviously, price pushes above higher. Now, what could save you from getting stopped out is that there's nothing attractive about that move to the upside. When you look at this order block here and this move up here, you can see the imbalance with a nice looking order block. No imbalance really here, apart from this one here, which would have been a decent entry, to be fair. But looking above here, you know, if price is breaking below there and it starts to make lows, that's a sign it's going to come for your high, for your low, sorry. So if you look at the line chart, price is your accumulation here, made a high, made a low, made a high, broke the low. It's actually distributed. So that's a sign that price is actually going to start coming lower. So you can see the distribution. So potentially that there could get you out of a stop loss. And also, if you're unsure on the distribution and on the smaller time frames, that's absolutely fine. All you have to do is wait for evidence. So, you know, looking at a smaller time frame, what can we see? Well, we can see price. Oh, do that again. We can see price is broken lower. It's came back in. Really nice sell opportunity there. Price is making lows, highs, low, high, low, and then what happens? We push above, we break structure. So what can we identify on this time frame? Well, it doesn't look like price actually came back down to here, but well, technically it did. Because if you look at the imbalance right here, we did fill the imbalance. So it only came into this imbalance and then it pushed to the upside. But that there is quite a tricky trade to get into. Also, you're not going to have very good risk reward, because if you got in on this imbalance, that's a big imbalance. You're going to put your stop there, you know, just to take it up to where it is now. It's a 3-to-1 for being in it for most of the afternoon, 4 hours worth of trading. You know, we're looking to get in and out a little bit quicker. So where could we be looking to get in here somewhere? Well, we go into the 1 minute time frame or the 2 minute time frame, and we literally just see if we can walk price going up. So we've reacted in this imbalance, we've pushed higher. There's nothing here that looks that interesting at the moment. We've pushed higher, we've come down, nothing really. So the entries aren't really there. And this is the thing, this is why you need to focus on just one pair, because this is a lot of action going on right now. And it's all just real crap, to be honest. And there's nothing there really setting us. We had a big push there, a big push down. You can see prices obviously pushed higher, came down again. We haven't taken the high yet, so we could potentially look for a smaller entry. You know, the entry I can kind of see is even, I wouldn't even say that imbalance there. This imbalance could have been okay for an entry. But again, by the time it gets too high, you can see price starting to get a little bit choppy. That there is a sign that we're coming for the high and price isn't very interested anymore. But if you note when this actually happened, you know, this is all after 4 o'clock. You know, so look at the price action here. It's just moving quite slowly. But if you go back into the 230 area, you can see price moving a lot better. So you're getting a lot more cleaner opportunities. So it's just interesting to see the difference in price action. You know, time and price really is everything. I really wouldn't trade much past 4 o'clock on a GMT, you know, because price does go a bit funny. Looking at NAS today, we swept below here, and you know that the aim was to get into this high here. There was a trade that I took in here on the 1 minute time frame, and I was just playing off this imbalance. The reason I played it was because we came lower and aggressively pushed higher. The imbalance was in this order block. So 1 candle, 2 candles. This was the area here, because that is typically a sign it's going to come for the first imbalance, and there wasn't really any other imbalances lower. So you can see there, that is an imbalance, wick to wick. And it comes in, fills it perfectly, and then pushes higher. So that would have been, you know, your only target really would have been the next high. It's a shorter term, but because of the entry, that gave us a 1 to 3. So that was absolutely fine. You know, looking at what price has done since then, and if you get confused and it kind of looks a bit messy, just go up a couple of time frames and look at what, you know, the higher time frames actually doing. We can see that realistically, you know, we came down to this candle here. You know, on a 1 hour candle, you know, we can see price coming in to this candle here. So it looks a little bit cleaner. And we just come in, swept these lows here. That looks like equal lows. Liquidity, grab, pushes higher. Your entry is order block, imbalance. So right here is a really nice entry. But we've not got any targets. So there's no point taking this entry. But if you're playing within imbalance and an order block, that there is a really nice entry to take price higher. You know, and after here, there's nothing. It's just too choppy. You know, looking at S&P, again, we've taken Monday's high. Look at it where we're off to. We're in this imbalance. It's evident we're looking to try and get to this candle here. If I was looking now for what price should do tomorrow, you have to identify the previous daily candle. So when price is here, you can see daily low from previous day and daily high. Yes, it is, Isaac. There's a few different phrases on your broker, so I'm not sure. You know, my one's got quite a weird name. So looking at the daily candle, we can see price. You can see if you look really closely, I'm just going to go in, there's a wick that came into the candle and then pushed higher. So it's about going onto a smaller time frame, identifying what's happened. So we can see this is it here. The wick on the daily candle filled in some of this imbalance. And we can we can shop all the way down, seeing if we find anything. What do we find right here? 1 hour candle. So price is moving higher, comes down, takes all this liquidity, the internal liquidity that we spoke about the other day. Again, if you're unsure on that, watch the video. If you're still unsure on it, don't worry, it's all going to be explained in the course. And then what happens? Price comes into this area here, pushes up. So now we can look into this area here, big candle. There's our candle here. We can identify this range. So, this here is our point of interest. We can see, even without going down a time frame, we got the entry right there. If you want to just play on the 1 hour time frame, look at what's happened. We've come into this 1 hour candle, we've accumulated. That's a valid entry. Like if you took that on the 1 hour today, right now you are up at 8 to 1. If that's a 1% risk, that's 8%. If it's a 2% risk, I mean, it's crazy gains. But let's see if we can take it a level higher. We can see price moved aggressively and then took a bit of a while to push higher, which isn't ideal. You want price to come down a little bit slower and the aggressive move happens. You're playing within this area here. That's generally a really good entry. But, on another time frame, what do we get? You can see here, price pushing higher, 5-minute structure break. Identify the trading range. We've got the area, the discount area right here. Imbalance, institutional FU candle, because that there took out this little bit of liquidity here. You could have played off this imbalance. If you had your stop loss, so what I used to have a terrible habit of doing is putting my stop loss here. And you have no idea how frustrated I used to get when price would go in my direction and miss me out by a pip. There was nothing more frustrating, but that's when you learn the art of following price up. If you miss this trade, it's about identifying how we can get into this area here. I mean, we're only on a 5-minute at the moment, but let's see what happens maybe on a smaller time frame, a 3-minute time frame, if I don't lose it. So even on a 3-minute time frame, we've come into the discount area and we can see prices accumulated right here. It doesn't look as clean, so we can go into a 2-minute area and just shop around these time frames, because you can see there 2-minute doesn't look that clean. The 1-minute is clean, so this will probably look a little bit better wherever it is. Here we go. So price moves higher, and then realistically price comes down quite aggressively. I can tell you now, no one's really looking to take this because this is an aggressive move down. It looks like price is going to completely dump below here. If you missed that, that's fine. If you took it on the 5-minute, that's fine. We did get this liquidity grab here. Price in this consolidation. This is your expansion. Aggressive retracement, could be a reversal to the downside. It actually closed below, so you wouldn't be getting in here because of the candle closes and things like that. Looking at what price did then, it pushed higher. And what happened? We came back to this candle. So this is an institutional candle. Why is it an institutional candle? Because it's the last down candle before the up move, and it's not a candle which is taking out liquidity. So it's an institutional candle. It's just the last candle before price moved down. It's a candle which filled in this imbalance as well. So this is a really nice entry right here, which would have played out, again, a bit too late in the day, but even if you take it there, that's a 3 to 1. If you held on to it, where price currently is now, that's a 23 to 1. A 23 to 1. This is how insane price action is. This is how good it can happen. And I can tell you now, guys, at the moment, first 2 weeks of January are crap. This here happening in New York session, you will clean up completely. You know, London, New York session, this is when the trades will happen in a couple of weeks' time, and you'll get yourself in on these trades. You know, it's just about understanding where it is. So, for example, I'm happy to get into this entry here because price is moving slowly down. It's flagging down. That there is scary. No one wants to get in on that. It's taken this liquidity down here. So when price is flagging down a bit slower, we can get in. But let's say you missed that entry. You know, you can still follow price up. When you see a big push to the upside and you see the imbalance has been created. So if I get rid of that, if you literally see that, and that's your candle close, this is your imbalance right here. That there is fine to enter off of. It's very big on imbalance, but looking at where, you know, what price did, you could have easily taken a fill entry right here, stop below there, aggressive, even just to go to there is a 3-to-1. You could have easily taken price. So, James, the perfect answer to that is this happened. So the perfect and most beautiful thing about price action is it's fractal. It happens on every single time frame. Okay, this is here. This is for the people obviously looking to trade on the smaller time frames, but you can absolutely do this on the higher time frames. And I'll try and find you some examples as well. So if you're at work and you haven't got access, why not enter on the upper IC candle? Which one are you talking about? So, you know, looking at the higher time frames, 1 hour time frame, like I've said there, you know, that there pushes higher in that your accumulation is technically there. There's a really good entry right here. You know, this is just if you want to really scale it up on the 1 minute to go higher. So if you really clean it up, you've reacted here and price is here. That there's a 1 hour entry. You've got 2 hours at 3 o'clock. Now, obviously, it depends the hours you work and things like that. But there's absolutely nothing wrong with trading on 4 hour, 1 hour, 2 hour. You know, 15-minute will give you the solid entries. So, for example, it's happening right here. So we can see prices obviously coming into this area here. Price aggressively moves higher, fills in this imbalance right here. That there's a decent enough entry, and that then gives you a couple of, you know, it gives you a couple of hours to get into it as well. So there's plenty of opportunity. If you're working full time and you can't look at the charts all day every day, I would just say focus on the 15-minute and above. You know, play everything in line with the daily candle, work along the daily candle only. So right now you wouldn't be looking to do anything until price is in your daily area. So look at it, I've been waiting for price to come here. And then I want to see, you know, price react on a smaller time frame. You know, you can easily set a pending and walk away. And there's nothing wrong with that at all. If you get, and what I would even do then, if you're looking to take trades on a higher time frame, I'd probably bring the risk up a little bit. I'd bring it up to 2% because you're not taking as many trades. So you don't have to bring your risk down. And if you get a 2% risk and you lose 2%, you lose 2%. But if you win that 5-to-1 on a 2% risk trade, you're up 10% for the week. So you can really refine your trade entries. And again, we're in the modules in the trading, we've got different categories for short-term entry and long-term entry as well. So it's catered for people that want to swing trade and want to trade with the higher time frames. So please don't think you're alone if you're trading on the higher time frames or anything like that, guys. Okay, so hopefully that's that. So looking at gold, I mean, gold looks like to me at the moment it is just taking out both sides of this ugly range right here. So we can see price moves higher, price moves lower. You know, I'd be potentially waiting. You know, this could easily be a liquidity grab. So now I'd be waiting to see what happens at this candle, because we've taken both sides out, we've respected it, and we're now pushing higher. So this here is your area where you would anticipate accumulation. We have just about on the 1 hour got it. So what I would hope for is a really slow Asian session, go down to a smaller time frame. Potentially, I mean, the only issue is it looks balanced. What I mean when I say price action looks balanced, it's the there's not really anything aggressive happening in here. So it's, you know, price is pushed up, mitigated in, price is pushed up, mitigated in, price is pushed up, mitigated in. So realistically, you know, for me, it's either going to carry on pushing or it will just plummet to the ground and take all of this out, because it doesn't really look that attractive. It's setting itself up for the Asian session, basically. But are there any charts that anyone wants me to look at, guys? And I'm happy to obviously go over things. But, you know, whilst you're waiting for the content on the course, get used to just really knowing what an FU candle is and an IC candle is. An FU candle, this one here, took out liquidity. You know, that candle here is an institutional candle because it did not take out liquidity. But they still mean the same thing. They're the last candle before price moves higher. So right now on US 30, I'd be looking at this range right here, measuring the range. We're in our discount level. That's fine. 1 minute time frame. You want to be looking for price, or a 5 minute time frame. You know, you want to be looking for price to come to this area here. This is an order block. And, you know, I want price to travel down and then do that. Ideally, that happens in the London session. But, you know, this can happen on a 15 minute, a 1 hour, anything. You know, like we said, we've got perfect accumulation on US 30 on the 1 hour. But I think the most important thing, guys, is focus on 1 or 2 pairs, no more than 2, because otherwise you are just going to get lost in the source. You know, it's all about looking at price action going higher, because if you miss the move down here, you can get it on the way up as well. There are areas you can do, and it's all about focusing on liquidity grabs. So if I draw it out just to try and make it a little bit more simple, let's say, you know, price is moving lower, and then you've got this entry. Here's the entry right here. Now, if price is obviously pushing higher, you're going to see this on the 1 minute. Okay, if you start seeing this kind of thing, and then a little liquidity grab, and then a push to the upside, and then you see imbalance in here, take that entry. As long as your target is still here, you can take that entry. And even though you're at the top of the trading range, it's just a clever way to scale. And you can do this on a higher time frame as well. You know, this is the beautiful thing about trading. Price is fractal. There's nothing stopping you doing on a higher time frame. You know, even here, you could have just set an entry at this 1 hour candle, but what you got, you waited for your accumulation, we had it, and it's the entry. So it's perfect. You know, even right here, 1 hour time frame, we can see this imbalance is created, push to the upside. You know, get rid of that for a second. What did price do here? You know, we're making highs, and what we're doing, we're retracing in this imbalance, aggressive push higher. There's your imbalance, which has been left. Your entry is literally order block and imbalance right there. If you're holding that now, you are up nearly a 4 to 1. If price moves into your area where discount and imbalances overlap, is that indicates a strong entry point? So this area here, if the imbalance overlaps with the order block, that's exactly why I played that 1 minute time frame wherever it was. If we look for it, so the reason, if it ever, where is it? Was it on NAS? I can't remember where it is. But essentially, yeah, if you, I'll draw it out. So it's more simple. So basically, when price is moving higher, if we break, and this is your order block here, if the imbalance is with the order block, so that there is imbalance, and let's just say that there is your order block. If that lines in, that's the perfect entry for a sell. So it's just giving you confirmation that, you know, the imbalance, it's in the order block. It's going to come back to the order block and actually take you in for a sell, because the imbalance is a magnet. So your entry is always at the open of the IC or the FU, or other than the imbalance. So my entry, was it NAS? It was NAS, wasn't it? So yeah, my entry is it's usually imbalance with order blocks, essentially imbalance with order blocks. So I really need to find this. Here we are. Perfect example. Okay, 1, 2, big moves down, liquidity grab right there at the open. This is the New York Open. This is when the volatility kicks in. Price has pushed to the upside. We've got a break of structure. Now you can wait for a couple of things in here. You can wait for price to come down lower and be super, super patient. But when you've got this imbalance, that there is a sign that you are going to get rejection. And you can backtest this, guys. Backtest this and look at the imbalance. It usually plays off the first imbalance and it reacts. But the reason I got out just above this high here, so my entry was at the bottom of the imbalance. My stop loss was on the bottom of that candle, and I literally took it here for a 3-to-1. The risk reward ratio is on. And the reason I got out is because price can come lower. But I wanted to get into this trade because I knew price was going to react in here. And the reason this imbalance is a magnet is because it's supported by the order block. But also when I was looking lower, I couldn't really see any imbalances. You got maybe a little bit there with this candle here, but I don't think price ever even came back, or it did. Look at that. Stunning. You know, it didn't quite come back to the pip, but if you wanted to wait, you could have waited for price to come back down there. And then if you miss the time, if you miss the entry here, this area here, this entire move down. So the imbalance will be taken first before the IC candle. Yeah, so essentially, James, you're going to get a reaction off of the imbalance. I'm going to show you a load of examples, and the course is going to go over all of this in great detail. So trust me, once you see it and spot it, it'll be impossible to unsee it. It's just institutional order flow. This is exactly what price does. It rejects, takes out new highs. If it comes down lower, it's because it obviously wants to mitigate in there, you know, but because we had a target, short-term target, we took it. You know, price came down, that was the entry that got us in. It doesn't always work out. Sometimes it will, you know, completely smash through your stop and go there and then push higher. And, you know, if that happens, that's okay. You know, we know we're going to lose trades. If there is a series of imbalance, which one do we consider? The first one. Okay, so if there was loads of imbalances, I don't know if I'd have taken this trade. But because there was one imbalance, this was the perfect magnet for price to go higher. You know, but typically if there's one or two, so if there was one here and there's one down here, I'm still taking this one. But if there's one there, one there, one there, I'm not doing it. You know, it's too much. But if you see what happened with price after this, we reacted, you know, we didn't quite come down, but again, hopefully you can get yourself in on spread and things like that. You know, if you miss this entry here, you've got this area here as your order block. And this is all of this move, the entire down move, because that there, as much as it's trending down, you go up a time frame and it looks more like an order block. So you can see there, 1, 2 candles, that's actually an order block. Then you go back down to your 1 minute where we reacted. What happened? Price is moving higher. Price is pushing higher. What does it leave? A little bit of imbalance. Right there. There's your entry. You could enter there. Now, price is obviously pushed higher and higher and higher now. What does it do here? Imbalance. Reacts. Fills. Now, you might have been stopped. You would have been stopped out. You maybe have, you know, there's imbalance here as well, which we can, you know, you can see you pushed into. But even then, you know, if you took this entry here and you just took it to this high and then you saw this imbalance being tapped in, you could have taken it to the next high and you can literally follow price up. But it gets a bit choppy when price is you know, moving the wrong way. You know, seeing here, price aggressively moves, a nice rejection, price break structure, comes higher. What does it feel? Look at that. I mean, how beautiful is that? Right there. You know, price is pushing higher. What happens here? I mean, this just happens all the time. Price pushes higher, order block, within the order block, imbalance. It's not obvious, but we fill it. We come in, we push higher. If you miss it, you've got this entry here. Price is pushing higher. There's an entry there. This happens on the higher time frames as well, not just the 1 minute. But look at the entries you potentially got access to. This is what I say when when you do get to full time and you do get funded and things like that, play with one time frame, because you could go 1, 2, 3, 4, 5, 6. You get 6 trades that are all coming in, maybe 1 or 2 loss, even 4 wins. You could really scale up here. If that's only if you miss the one at the bottom. We saw price happening down here. If you got in that one, you have no need to bother what's going on here. You can walk away. You've got your stop loss at break even, whatever, you're sorted. But looking at what price is doing, this is just if you miss it. It sometimes taps it, it sometimes fills it. We saw that price here, that was a little tap. This one here was filled completely. I think the one I waited for was a complete fill, and I actually got in when it filled it, because if you got in there, the risk reward ratio wasn't actually on. That one there got filled. That one was tapped. So it's James, it's just different. Every time it's different. You can get in on the imbalance that's open. You can get in when it fills it. You just risk the chance of losing it. Looking at a higher time frame perspective, I was looking in this area here, and I still feel like this is on. We have had price moving higher, but I still feel like that's just to take this area here. I think this is a really good entry area right here. And EU, I know we were looking at EU, but in reality, it's just crap. That there is consolidation at its finest. I know we've broke out of it just, but I would consider that all, I would consider that really choppy. I mean, even then, you can see here, 15-minute time frame, price pushes higher, comes to this candle here, as well as filling in the imbalance. And then, yeah, price isn't really giving us much in terms of a re-entry. But has anyone got any questions at this point, guys? And I'm sorry if I've obviously spoken too fast. There's so much you could, I could talk for days and days and days on this. And do you get your target from the daily, either bull or bear, and follow the smaller time frame to your daily target? So yeah, every single day, I clear my charts, and I am on the daily time frame. I'm looking at what price is doing now. I can start on the monthly, and from a monthly perspective, we look like we could obviously sell off, but the only reason we're looking at the monthly and the weekly is really for targets and things like that. But the daily time frame, it's about identifying what the previous day did. So if you look at NAS now, let's just say, for argument's sake, we close here, and this is the high. This here is the low. Now, if we bring that down to a 4-hour time frame, we can suddenly see, that's the low. We could do with breaking that, so we want to try and break the low and then attack the high, because there's going to be liquidity at the low of the daily and liquidity at the high of the daily. And when you look at what the structure on a 4 hour is doing, well, what I can see is, this area here would be a nice area to react from. So how perfect would it be tomorrow if price is taking its way down to target the daily low, come in for this 4 hour candle, and then eventually push higher? Now, this isn't all going to happen necessarily tomorrow, but we might be on a lower time frame, and we might see, some 1 hour structure, and we might see a break. And if we see a break, the 1 hour might be able to be a good indication that we're selling, in which case our target for tomorrow would be eventually getting to this daily low. And then Friday might be a time when, this could be all tomorrow's price action. And then Friday, price is in here, and we start looking at buying, because there'll be a daily low down here, liquidity, whatever, take it, push higher. When you look at what today's price action did, it's really important that you are really, everything's on the higher time frames, because we can see, looking at NAS, this is the daily down area. You can go down the time frames and just see why was it moving where it was moving. 1 hour candle, close below, liquidity grab. You can see liquidity was formed there. you know, that gives us our bias. Price pushes higher, in you go. And that's a 1 hour time. That's a 1 hour break. Am I making sense, guys? Are you all, I'm worried because there's silence on the, I'm worried that you're not with me, but yeah, does that make sense, guys? Any questions or anything like that? It's beautiful. The price action is absolutely beautiful. And yeah, that's fine. It's not, if it's slowly sinking in, it's going to sink in, it's going to happen. You know, it's going to happen. The course is really going to open up eyes. You know, it's just about being patient. And I think a lot of the time, and we're going to talk about this if you're involved in the mindset on Friday, and again, if you can't make it, it's worth watching it because the points I'm going to make are relevant to everyone. It's about dealing with what you see on the day, because don't be scared to not take a trade. Don't be scared to not take a trade if structure isn't doing what you want it to do. Makes perfect sense. Think it really clicks when you put it into practice. Really excited. Training's on point. Perfect. No, I really appreciate that. Can you please show me how to analyze a chart? So we just did it. So, you know, let's go on to a completely fresh chart that I haven't gone on for a while. So, you know, I would, if I'm on a new chart completely, I'm looking at the higher time frame, monthly down. And, you know, in my eyes, I can see here that we've obviously got this structure break, and I'm going to whiz through this. I mean, look at this on the monthly time frame. This is how fractal price is, guys. Look at that. Where's my thing gone? Imbalance, filled, up. You know, it's just perfect. You know, price action pushes higher from the imbalance, accumulates in here. Price action pushes higher on the weekly. What does it do? Imbalance fill comes into the candle as well. You know, this is how fractal price is. We're on the weekly time frame, guys. We're on the weekly time frame, and it's happening. You know, as of now, I'd be looking at this thinking, you know, from the monthly, just quickly coming down. You know, you would like price to accumulate in here somewhere. Looking at the monthly candle, you know, we are bearish. On a daily, this is where your direction is. Again, it is bearish. So I'd be anticipating distribution in here somewhere, but at the same time, you know, that there's your point of interest. And we've got imbalance above, so you've got a kind of a red flag for this as a sell. I wouldn't be looking necessarily to sell that straight away. I'd want to see 4 hour price structure push higher. Now, looking at what's going on here, that there tells me price is going to attack that high. It's just slowly walking up. It's building a lot of liquidity ready for when price does sell off. So I would be waiting for price to get into this imbalance, which actually would take you into this weekly candle here. So this here is a seriously good point of interest. And I also like this area because on the weekly, we sweat this liquidity right here. So I would anticipate price pushing higher and then coming lower. Target would be this incredible liquidity sitting right there, guys. You know, you could potentially get yourself into a very long-term trade. This here could pass you funded challenge and some. You know, this is the sort of stuff that makes you rich in one trade. You know, and that's on the weekly time frame. So yeah, I'd be waiting for price to close above here. This is internal liquidity. And then yeah, you know, see what happens after there. But that's a waiting game. You know, wait to see what happens. And then we'll see what happens in there. So it's a case of waiting. There's no point going any lower because looking at what's happening now, we don't need, nothing's happened lower. So let's wait and see what happens, you know, when we're structure's a bit easier. I was on the 15-minute when highs were taken out, so I was waiting for sales after structure break. 1 minute imbalance was created. I was waiting. There was a 5-minute imbalance got filled. I guess, how do you know which one to look at? Green box. So look. So you were looking for sales after the structure break. So it's the first imbalance, essentially. You know, so did you so you filled this imbalance in here. So what you could have done is placed your entry on this 5-minute candle because it filled imbalance and sold off. So you just have to wait a little longer when taking times on. Yeah, so exactly. It is price is fractal. Price moves the same way on every time frame. If you're on the higher time frames, it's just being more patient. But like I said, I would put higher risk on the higher time frames because structure is stronger on the higher time frames, and that's why on the 1 minute time frame you always get taken out, because sometimes it just takes out areas you didn't quite see on the higher time frames. But Lonzo, yeah, going on to your one. So you were looking for a sell inside this imbalance. You could have taken this imbalance, price redistributed here, and you could have got in here. Now, when price, I can't see what's going on here, but the reason I wouldn't take it on this imbalance is because the imbalance is quite big. This imbalance would be a good entry to take it off of because it's in line with the order block. I was waiting for 15 imbalance to fill. Okay. Yeah, that's fine. The thing is with EU, again, nothing, that's not something I would have wanted to trade. So are you here, Lonzo? Is that where you were? And then you didn't, yeah. So looking at this here, price action dropped and you wanted to wait for, so you were waiting to fill this area here, yeah? And then there you've got yourself your point of interest right there. And then, yeah, nothing's really happened at the moment. But the thing is, this is what happens when you're in this horrible range. It's just not very attractive. I mean, yeah, maybe look at another pair. I mean, what other pairs do you trade? That's maybe what I would sort of focus on. But any questions, guys? Anyone want to know anything? Gold, yeah, gold. But again, gold is getting out. So gold. So this is what you want to see: price pushing out and then pushing lower. And I think we were looking for price to, we got the close, but it's not very attractive on this area here. So this here is a bit balanced. So the best thing to do is wait till London session and we can have a look and see what price does in Asian session. It's hard to look for entries at this time of day or night, wherever you are in the world, because, price is just going to do what it wants at this point. It's not going to necessarily abide structure. But looking at, today, it's been quite a quiet day. Tomorrow, London session is going to be busy, guys. London session is going to be busy. USD news, CPI event. And I would expect the New York session to be busy as well. So what will be ideal tomorrow is on London session, we expand, so what will be really ideal is that London session causes a nice push down. And then we get on the New York session, we get in on something like that, from the big London expansion from news. We can do oil quickly. I think oil was looking really clean, wasn't it, when we were there the other day? Do you wait until after the news? It depends. It depends if structure's there or not, so oil, weekly's kind of ranging, definitely looking in here. Again, 4 hour, I'd be targeting price to come to that imbalance. That's the first target. The move was kind of down here. We pushed higher on a 1 hour. It kind of looks a bit messy. I mean, you could look in here because that is, that does work on a 15-minute range, but there's no imbalance. So I feel like we are just going to keep slowly walking our way up to that imbalance. And then when you get to that imbalance, then you could potentially look for sales coming down. This was the daily area. This is that perfect trade we found. We've come down, we've broken structure. Overall, the best thing to do would be to wait for sales in this area here. So I'd be looking for sales in here. This imbalance is really good because it's with the order block and it's with the daily open of the candle as well. So really, really strong area for potential distribution. But again, guys, don't necessarily look at going on the lower time frames until price is in the area. There's no point looking at price until it's time of day or it's in your right area. But yeah, hopefully that's okay with everyone, guys. As I say, the recordings will go straight in. The yesterday and today's London session and New York session are on the website for you to have a look at. The module 2 is going to be out over the weekend, hopefully before Friday sort of time. I'll start getting episodes out on that, and then it really gets into the charts and things like that, guys. So hopefully you enjoyed the first module, and if you haven't watched it, obviously go and watch it. And yeah, it's going to be really, really good, guys. It's really, really exciting. I'm very happy that you're all here and we're all going to, work together to achieve financial freedom with each other. Are there any books you would recommend? Yes, there is. I'll put a screenshot and I will put it in the Discord. It's a book called Relentless. It's a book called Relentless. It is the best book I've read, hands down, and it really opens your eyes. And there's another book as well I'd recommend. 11 p.m. here. Is it really? Wow. It's 9 o'clock here. So yeah, guys, without further ado, I'll let you get on with your evening, morning, day, wherever you are in the world. I'll speak to you guys on the Discord. And you know what I would say, I'm really liking the fact that we're getting more and more energetic on there. If you are kind of silent on the group chat, guys, start getting to know people as well. It's all about, you know, networking and things like that. So let's you know, get talking on that group chat, guys. Let's really build ourselves an amazing community. And even if you're not talking about trading, but you're talking about, you know, your life, just get to know each other, guys. We're all here to, you know, we're all here to be together and work together. And that's the beauty of trading. Trading's a lonely place when you're on your own. So the best place to do it is with people. So let's get it going. Let's smash it together. 2023 is going to be our best year yet, guys. So I will see you guys tomorrow. I'll talk on the group chat. See you later, guys. Well done.